Hey guys, so today I'm going to be talking about a couple of the bank stocks and why I think it's so volatile to invest into a company like Bank of America right now. So if we look at the monthly chart for Bank of America, you can see exactly what I'm talking about. It's all the way up to $25, then down to 22 the next day, then up to 25 again. And what exactly is this dependent on? Now, it's hard to tell, but a lot of the time Bank of America moves when Jay Powell makes some sort of decision on interest rates or he starts printing more money or lending more money. Anything like that can move a stock like Bank of America. However, you can see that their price movement hasn't really been in one single direction. They've dropped all the way to $18 at the end of the coronavirus crash, and even though they were worth around 35 before the crash, they haven't been able to come back to this level or even close to it. By now, a lot of the stocks that have almost recovered or recovered should be worth around $30 if they were Bank of America. And Bank of America has never even broken above the $25 range. So when a lot of people ask me, is Bank of America a good investment? Is it a good bank to hold? I would honestly say no. Like as I said in a previous video, they have a lot of their debt held up with oil companies, and at the moment, oil companies are in a very perilous position because a lot of people don't know if oil is going to recover from these all-time lows, or if there even is a market for people to purchase oil. Because after a lot of stuff like this happened, even though oil prices are so low, companies like Tesla have been skyrocketing in the last few weeks as a result of the fact that oil is just not really reliable anymore. And if you can see here from this graph or from the earnings graph, they didn't really do well on their last earnings and they hit way below the target. Now, a lot of companies are expected to hit below their target during coronavirus, but this stock is just one that hit way too much below, and unfortunately, they don't show a lot of positive price momentum in the last few weeks. Now, another thing is that when Bank of America makes their money, it usually is when a market crashes and a lot of people have to default on their homes, for example, like what's happening now with the coronavirus. However, if you think logically, those people who are selling their homes, who are they going to sell them to? There's not really anybody else in the market trying to buy homes at the moment. And at the end of the day, even if they are, housing prices are not going to be going up very substantially in the next few weeks. And if we look at another company here like Bank of America, Wells Fargo, we can see the same price momentum within the last few weeks. If we look at their 1 month chart, it'll probably look exactly the same as Bank of America's when it loads here. And what we can tell from this is that there just simply isn't a concise price momentum for banks in the market. You can see that they were all the way up to 33, then down to 28, then back up to 30, then down again. And there just isn't anybody who can tell you for sure our bank's going to be able to recover from this crash. Like I said, a lot of their money is made from people mortgaging their homes and from people taking loans out from them. And in this type of bear market or in this type of crash market, there isn't going to be a lot of people looking to do this kind of thing. So yeah, if I had to make a recommendation on bank stocks, I would say buy puts and just simply don't buy them until we can see a lot of positive momentum for this market and until we hear Jay Powell stop printing money, because as you may know as well, it's actually not beneficial for loaners for more money to be in the market, because then it's easier for the people to pay it back. If inflation goes up, then people will have more money in their pocket, and if Bank of America loaned you $20, then you might have $30 for that are worth that same as the 20, and you're simply going to be able to pay back the loan easier, and it's not going to be good for Wells Fargo, Bank of America, and other bank stocks like this that make most of their money off loans and off mortgages and off people defaulting on their homes. So yeah, all these signs are just pointing towards the red for these stocks, and I wouldn't buy in for a long time. Okay, so good luck, and I hope you guys make money.